This is charitable giving for income tax purposes only. It's very straightforward for estate tax purposes because if you die and you leave a gift to charity, it just passes estate tax free. The main problem people have is with income tax. So in the live review book, we get into types of donated property, and the simplest all is a gift of cash. There's no problem there. The difficulty that people have is a gift of appreciated property. Now we're talking about stocks and real estate. That's what we're talking about. Collectibles have their own rule, but we're talking about stocks and real estate. So the problem that people have is the 30% rule versus the 50% rule. So we're talking about only publicly traded organizations, the public charities. And the 50% rule applies as an overall rule. That's an overall rule. You can't get a deduction greater than 50%. So that's the overall rule. If you look at that chart that outlines the important rules and limitations, there it is. There it is. So you can't exceed 50%. You cannot. Now, the 50% applies again in a different way with appreciated property. It applies again. Look at step 2 in that chart. Again, the amount of public organizations is the 50% organizations, and then it says up to 30% of AGI for long-term capital gains property. And that's where the confusion lies. Well, Ken, do I use 30% or do I use 50%? Well, if it's stocks and real estate, no matter what, you cannot exceed 50%. But if you want to use the fair market value, here's where the gremlin comes in. If you want to use the fair market value, you can only deduct 30% of AGI. 30% of AGI. 30% of AGI. So that's where the problem is. That's where people get confused. Do I use 50% or do I use 30%? Well, first of all, if you want to use fair market value, you've got to use 30%. I'll say it again. You want to use fair market value, you've got to use 30%. When do you use 50%? When you use basis. That's the emphasis that's at the bottom of the types of donated property where it says the note. When using fair market value, you can only deduct 30% of AGI. Now, if you want to use basis, then you can use 50% of AGI. It's one or the other. So when do you use fair market value? Well, when it's the best for the client. In the example, it says the widow inherited 4,000 shares of stock from her deceased husband. Her husband purchased the stock for $5 a share, and the value at death was 10. Well, she gets a step up in basis. So her basis is $10 times 4,000 shares or $40,000. That's her basis. So if she wants to use basis, she has to use $40,000. But it's currently worth $15,000 or $60,000. What does the client want to do? Well, I want to deduct 60. But if she wants to deduct 60, she can only use 30% of fair market value. 30%. It's one or the other. So in this case, her greatest deduction will be used fair market value, but in the first year she can only deduct 30% of AGI, which is still better than using basis at 40, right? Now, what happens if, as it shows in the example, her basis was $55,000 and the fair market value is $60,000? Well, now, that's different because she can get a bigger deduction this year using basis. Now, she loses the $5,000 difference, but she gets the $55,000 this year versus $43,500 if she uses fair market value. Well, that's about $12,000 difference. Let's say she's in the 39.6 bracket. Oh. So the $5,000 difference kind of goes away, doesn't it? Because, again, 12,000 times 40% is $4,800, right? So it's kind of a wash. But she gets the deduction now. She doesn't have to wait till later. And the present value is worth more than the future value of the deduction. So I'm going to just keep it simple. If it's in the client's best interest to use fair market value because it's appreciated property, then that's what you do. And so if it's in the client's best interest to use fair market value, use 30% of AGI. But if the basis comes up, and all of a sudden the basis is sitting under the fair market value, the answer on the exam is use basis, and then you can deduct 50% of AGI. Now, one last comment about collectibles. There has to be a use for that collectible. For paintings, there has to be a use for the organization you're giving it to. You're giving it to the university. What are they going to do with it? It's an agricultural university. So they don't have any use for it. But if you give the painting to the art museum, they have a use for it. Giving a collectible to United Way, they don't have any use for it. Give the collectible to something that can be used. So for collectibles, it has to be use related to use fair market value. Has to be. If the collectible is not going to someone that can use it, you've got to use basis. Okay? But then again, if it's going to the art museum, you have to make a decision on the 50% versus 30%. So I hope this helps. Good luck with the exam.